NIO reported fourth quarter 2022 earnings results. What I'm going to do in this video is review those earnings results and update my recommendation on NIO stock and let you know if the stock is a buy or not. Okay, so let's get right in. NIO's revenue surged to 2.14 billion in Q4. This was up 60% from the same quarter last year, and this is common among EV companies is that they're ramping up production, ramping up deliveries, and sales are soaring. The net loss improved by 169%. Still, the company lost 839 million on the bottom line. Vehicle deliveries of 40,052 in Q4 was 27% higher than in Q3 and 60% higher year over year. So excellent growth in terms of production and deliveries for NIO. However, vehicle margin in Q4 fell to 6.8%. This was down from 20.9% in Q4 of 2021. The company made some accounting changes and had to make adjustments to inventory prices, which brought down the vehicle profit margin. However, I'm concerned about EV margins in 2023 as price cuts and rising cost of goods sold are going to impact margins across the industry. Deliveries so far in January totaled 8506 and 12,157 in February. The February figure was a 98% improvement from the previous year. Now remember, January and February is not included in NIO's fourth quarter. So the numbers for January and February will be included in the first quarter's results. So these updates that NIO gave us is a glimpse into what their first quarter results could be like. Here's a comment from management saying in 2023 we plan to deliver 5 new products based on NIO Technology Platform 2.0, deploy 1,000 additional power swap stations to further improve the user experience and strengthen our competitive advantage in key areas of smart electric vehicles. NIO has a strong market share in the Chinese market for EVs, and it's a bit different from other EVs in that it has this battery swap technology. So if you have a NIO EV, when you go into a station, you swap your battery out for a new battery, and that is faster than parking your car and having to charge your car, which could take 30-45 minutes for some individuals with some EVs, which is a significant disadvantage compared to gasoline engine car where you could fill up your tank in 5 minutes or less and be on your way. So I think that's been a sticking point from a consumer's perspective to switch over to EVs is that longer charge time. NIO is a bit of a gap between that. It's not as fast. Swapping your battery is not as fast as filling up gas in your car, but it is faster than the other EVs where you have to park and charge. So that is proving to be advantageous, and it's proving to be a competitive advantage in its primary market in China. The company's forecasting Q1 deliveries of 32,000 at the midpoint and revenue between 1.8 billion and 1.67 billion. So if it's forecasting Q1 deliveries of 32,000, it's already delivered, if we count January and February, that's 20,663. That means it's gonna do about 11,000 deliveries in March, so below the pace in February. So a little disappointing because you saw the acceleration going from 8,500 to 12,000 January to February. You would have hoped that it went from 12,000 to 13 or 15,000 in March, but instead it's coming back down in March to reach a total of 32,000 for the first quarter, which will include January, February, and March. The company has cash and equivalents of $6.6 billion as of December 31st. So if you look at its net loss of 839 million in the fourth quarter, it's got many, many quarters it can continue before it runs into any kind of liquidity trouble. So liquidity and cash is not a concern for NIO. And to be frank, it's not a concern for I can't recall any EV company where cash is a concern. They've all been injected with billions of dollars in capital because EV companies were so popular during the earlier stages of the pandemic. They were able to raise billions of dollars of capital. So these companies can go on losing money for several more quarters as they ramp up production. And for me as an investor, that's concerning to me. That makes me hesitate before wanting to invest in this industry because normal competitive forces will not be acting on this industry, where in a normal competitive field, when companies lose money, some of them will drop out because they'll run out of money. But that's not the case for the EV industry. There isn't going to be any dropping out because they've all got billions of dollars, so they can continue burning through billions of dollars until they figure out if we're going to be profitable or if we need to drop out. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. So to answer the question, is NIO stock a buy after Q4 earnings? I'm going to say no, NIO stock is not yet a buy. Although the company did make nice progress in terms of reducing the net loss, I am concerned about the vehicle margin falling to 6.8% from 20.9% year over year. I was hoping to see continued progress in that margin. So for now, I will still say NIO stock is not a buy. All right, thank you for watching. If you like this video, I'm gonna add two videos at the end of this one that I think you're gonna like. So please go ahead and click on those, and I will see you over there.